you need to treat your business like its own entity and not let personal and business mesh together. So we see this more times than not, where you go out and buy a cup of coffee, you go out and buy a dinner, and it has nothing to do with business, but you use the same business card.
Right.
And then you're trying to sort out in the end, how much was business, which was not business. And it's just, for anything, it's not real professional. And you're probably not able to manage your company very well because you don't have a good indication of what your real profit margins are. Welcome to Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Shauna Theriault. Hey, Shauna.
Morning. How are you?
I'm awake, sort of. I just wish I could sit here and I could like call out bad financial planners. I don't think it's real professional to do that, but
probably not. Maybe not.
So we have a dear client here who didn't have any children. Husband passed away. She's not terribly old. She's in her, upper 70s,
Mm-hmm.
Was living by herself. We help her move. She has no nieces, no nephews either. Had that. So there's really no family members, right? So we helped her move. It's a team effort to independent living. So there's no assisted living as part of the facility. It's just independent living. Nice place. It's kind of like a Ritz-Carlton, actually. It's pretty nice. It's like every time I go there, I feel like I'm in a hotel. And anyway, she fell and broke her wrist last night. So who does she call? She calls her trusted financial advisor. So I ended up in the hospital with her till early this morning to,
I think that speaks volumes of you though.
Well, this is not about me. This is about bad financial planners. Look, she showed up at her doorstep and we helped her, and she's been here for a while. And she has some other health issues that require some attention. So it's not just me, but Tiffany here in office and Alexa here in office have done things to beyond the call of duty. Let's say that. But when her husband had chosen a different firm and he asked that firm, hey, we don't have anybody else. When I pass away, make sure that she's okay. Well, they promptly fired her.
Wow.
Because I think the stress from losing him, he was like he was her sole purpose.
Right.
And so the stress from losing him just made her do some kind of crazy things. Nothing illegal, nothing, just crazy
Emotional.
things. It just required some time. Right. And instead of honoring their verbal commitment, they just said, yeah, you're not a good fit for us anymore. And they fired her.
Mm. And
then I started thinking about this on the drive home at 1:00 this morning. How did I get myself in this position? And then I started thinking about,
that's the kind of person you are.
I started thinking about another client from another firm across the square from us that had she had a brokerage account. She was sold an annuity with a good chunk of that brokerage account. She you don't ever buy an annuity, get sold these things.
Strike number one.
Right. So she gets this annuity, and then they decide that she didn't have enough money with the firm, meaning the brokerage account got too small.
Because they distributed the money to buy the annuity?
Yes. And so they kicked her out of the firm and said that she could no longer be there. She needed to find a new financial advisor, but they retain all the commissions and the trailing fees on the annuity.
Wow.
I'm just like, I can keep going down this list. It just drives me insane. It's like, what is wrong with our industry? Only 4% of advisors are even fiduciaries in the true sense, right? And then are fee only. So fiduciary, only 4% are fiduciary and fee only. The rest of them are fee based that are independent, which means that you're a fiduciary when you're doing the plan, but after the plan, we can sell you stuff. That doesn't make any sense. That doesn't make any
sense. That's not a fiduciary. Right.
Right. That's fiduciary. And then think about all the CFPs. Certified Financial Planner, probably one of the most recognized designations in our industry. And I would say, I'm just guessing, 90+% of these people are actually selling you something. So if you have a CFP and you're working, like I've met an Allstate agent who had a CFP. What the heck is an Allstate agent doing with the CFP? Because he has nothing
selling insurance.
He doesn't even do financial planning. Right. That's weird. If you go to even like an Edward Jones or a Merrill or a Wells Fargo, and they are a certified financial planner, they are not fiduciaries. But yet, when you pass the CFP exam, you're taking a fiduciary oath.
Right.
So you're saying, I promise to always work in the best interest of the client, but it really should say, I promise to working the best interest of the client for the tools that I have and are given and are allowed by my employer.
Yeah.
That's what it should say.
Yeah.
And so I don't know. I just get so frustrated with financial services. And I'd say most of the new clients that we have are coming in because they've had bad experiences at other places. And quite frankly, it's kind of like going to the pound and every dog, ducks when you go to pet them.
Well, you can tell that
so abused by other
when
people.
they're across the table from them, it's like, you can tell that, they're like, are you being genuine? Or, that they're scrutinizing because they don't know. And I understand that. I feel that.
I mean, we have two tracks. We have the flat fee track and we have assets under management. And a lot of people who should be assets under management start off on the flat fee track,
right?
Because they don't trust people,
right?
And
they don't want somebody to take over their money because they've had that before and it wasn't a good experience.
No, and I don't blame them one bit because it's horrible. So I think the important takeaway here is, one, we should always help our neighbor, right? If we're not helping widows, if we're not helping orphans, and we're not helping the elderly, like, come on, that's probably why we have to have such big government programs, is because we're not taking care of our neighbors.
Yeah.
If we took care of our neighbors, we wouldn't need government programs. The same way with my grandfather. Take care of my grandfather. I pay the bills, take care of him. He's not on any government assistance.
Yeah.
Because that's what we do. We take care of our loved ones. If everyone did that for their loved ones, then we wouldn't have to have all these government programs. That's my 2 cents on that. And sometimes you need it. I mean, sometimes obviously medical bills are going to be big and you have to file for Medicaid, and that's how it is. But anyway, I just think that our industry could do better. And I don't know exactly how we would fix it.
Other than leading by example and doing the best that we can, is that. Yeah.
And then maybe starting to point fingers a little bit and say, hey, this is a problem. You guys need to cut it out. But this age of our litigious society, you probably get hit with a defamation charge and
right.
I would win, but then you get to spend money to defend yourself. It's just not worth it. But anyway, all right, time to wake up and do a podcast. We're going to talk today about separating business and personal assets. We have a lot of business owners that come through here. A lot of the business owners get the privilege of working with me because I am a business owner. And I will say that we have a lot of people who are really good at creating jobs for themselves. There's a book that I think every entrepreneur, every business owner should read. It's E-Myth by Michael Gerber. Actually, E-Myth Revisited is the latest edition. And what this book talks about is, we work for a company, we have this entrepreneurial seizure, and we decide we're going to work for ourselves. And then we set up shop for Acme Inc. and we start working for ourselves. And what we've done is we've created a job because we're good at what we do. And then people keep coming to us for more work. And then next thing you know, we're overworked and we don't know how to handle it.
Right.
Because we never cultured the manager of ourselves. Right.
Yeah. Yes.
And so that is the problem with a lot of small businesses. We've created jobs for ourselves. We don't know how to scale. Scaling is very hard. I've been doing business ownership for 24 years now. And if you look at my last 10 years, things have accelerated very quickly because it took me the first 14 years to
figure out what not to do.
Kind of figure out what to do, what not to do, and how to position yourself. And in financial services, age and wisdom actually benefit you, where when you're young, it's hard, right?
Yeah.
So it's important that you understand, not every business needs to scale. My brother-in-law and my sister, they build nice, pretty homes down in Hilton Head, Bluffton, South Carolina area, and they probably build 4 or 5 a year, and they do just fine. And they don't need to be your Pulte or your DR Horton scenario, right?
Right.
So, but they found their niche, and they focus on that high end niche to be successful. So, in this book, and what it would lead you to understanding is how to scale a company where it's less about you, more about the company itself, and focuses on service a little bit. So, that being said, we need to bring this back to the accounting side, in that you need to treat your business like its own entity and not let personal and business mesh together. So we see this more times than not, where you go out and buy a cup of coffee, you go out and buy a dinner, and it has nothing to do with business, but you use the same business card.
Right.
And then you're trying to sort out in the end how much was business, which was not business. And it's just, for anything, it's not real professional. And you're probably not able to manage your company very well because you don't have a good indication of what your real profit margins are.
Right.
Early on in our history, we used to do tax returns here. And I learned that, man, the margin on tax return is very, very small.
Mm-hmm.
The tax business is not a huge money making business unless you're doing really high end returns,
or just doing a ton of them,
or that's true.
Which that's hard to scale, because then you have to have the manpower to do it.
Yeah, it was a great time of year. I lost about 10 pounds every year because I didn't have time to eat.
That's not healthy.
But eventually, when we hit capacity, I was like, okay, well, what are we doing here? And I decided that we would partner with Sudi CPA, and basically just passed all my tax returns to them and say, you can do the tax returns and we'll focus on the planning side. Mm-hmm. So we have great software to do tax planning. We work in conjunction with other CPAs, but we're not going to prepare the returns here. That wasn't the best use of our time for ourselves or the client in the end. So that's what good financials can tell you. They can tell you what your cost per client is,
right? What
your cost per lead is. These are all metrics that you should know as a business owner. But the only way to do that is to get your personal finances separated from your business finances.
Well, and also too, if you're running a ton of, if you're commingling them, and you're trying to sell a business eventually, that's really messy to kind of strip that out.
Yes.
Or figure that out.
Yep. I've had owners tell me, when we sell, we're going to say all these expenses are really personal expenses, and therefore it would flow back into the company. So you're really getting this. No bank is going to finance that.
No.
If you can convince a person to pay you cash based on that formula, then that's fine. But no bank is going to finance. They look at a P&L.
Yeah. Yeah.
Right.
Exactly.
Don't get me started on banks. I don't know that they fully understand P&Ls and balance sheets anyway, but they especially aren't going to understand when you're telling them, oh, this is not really here, but it's there.
But it is there.
Right.
Right.
All right. So number one is legal protection. So the easiest way to pierce the corporate veil is to say this person is doing business. They say they have a company, but they really don't, because look, Mr. Judge or Mr. and Mrs. Jury, this is all their personal expenses just wrapped up in this business, and they're just trying to deduct everything.
Yeah.
So legal protection, you need to have annual minutes with yourself and document all that. An attorney can do that. A corporate attorney can do that for you if you don't want to do it yourself. And then you need to keep a separate account. So you have a checking account, savings account for the business, and you have a personal checking account for your personnel. You can move money back and forth, but you really should do that as like capital distributions or contributions.
Yeah.
You shouldn't be having your personal expenses on your credit card.
Right.
Now,
so I see this a lot with small businesses where you're sole proprietor, and at some point you set up a separate LLC, or when you're buying real estate for rental, separating the two and making sure you keep that segregated. Because if somebody sues you in your rental property, you want it to be titled to possibly an LLC, have a separate checking, have the, all the income flow through to there, all the expenses flow out of there. And don't commingle personal and listen, it's not bulletproof, but you still don't want to commingle personal and LLC assets together. Yeah. And so it gets really messy. Some people set up an LLC and never put the property in the LLC, and you're not, you have to actually execute and put, flow through and actually follow through with retitling and separating and having the cash flow properly going in and out, et cetera. To be able to say, if somebody sues you, this is a legitimate LLC, here's the separate assets. The whole purpose is liability, right?
Correct.
So you have your personal assets over here, and this is your LLC assets, yes. So it's the small businesses, real property, all of those kind of things. So that's where we see it the most with the real estate, and then the small businesses, of course, as you're saying.
You would take a step further in the real estate. You need a lease agreement to also be in the LLC name.
Yes. Yes.
So you run it like a company separate from you. That's the
now
theme
it's disregarded. That is disregarded for tax purposes. It flows through on your personal return if it's you or you and spouse. So you don't file a separate return for it, but it's still segregated in terms of titling for liability protection.
Correct. That's correct. Yeah. And going back to the real estate side, if you have to put a new roof on, you typically don't deduct that in 1 year. That's depreciable asset. That's another reason why you have to keep separate books is to keep all that accounting accurate.
Right.
Right. So it doesn't have to be complicated. You don't have to have a million categories. And that's another thing I see is people go from 0 to 1,000 and, they have these just crazy chart of accounts list.
Yeah.
Just make it really simple. Rental income.
Yeah.
Home maintenance expenses.
Yeah.
Right. Rental or taxes, interest. Those a chart of accounts should be pretty could be pretty
actually
simple.
On Schedule E it outlays it for you.
Yeah, that's true.
It just the categories are on Schedule E, and there's not that many of them.
We already talked about this a little bit, but tax compliance. So if your business personal expenses are not clearly separated, it could lead to questions about which deductions are legitimate. So if you were
I would think that would bring up questions if you're like, well, these expenses won't actually be here in the future. Right. It's like, well, what are they exactly that you're deducting? Because I just,
So the easiest way to fix it is if you have personal expenses that end up in the business is you don't categorize it as a meal or vacation or travel, whatever. You just categorize it as a distribution.
Yeah.
So as long as you put it as a distribution, then it won't mess up your P&L.
Yeah.
But if you start trying to truly expense it, that's not going to look very good.
Right. Right. And there's red flags that they see in audit or IRS, things like if you're running tons of meals and tons of travel percentage wise against your small business, that's a red flag for them to potentially look deeper into it.
Yeah, very true. Improved business credit and financing options. So obviously, if you have a growing company, business credit's essential for securing loans and line of credit, lower interest rates. If you don't have clear financial distinction, you could have your credit score impacted by this, meaning that your ability to get the best business loan, they're going to want to see a P&L for usually the last 2 years in tax returns, and then a P&L year to date. So again, another reason why to keep things separate. And then there's also have professionalism and credibility. So if you're trying to take on a partner and investors, you need to be able to show a profit and loss statement and a balance sheet.
Right.
And if you don't understand that, there's lots of free YouTube videos out there you can find on what a profit and loss statement is and what a balance sheet should look like. And then your accountant should be able to help you as well in creating those chart of accounts and then also making sure everything's categorized correctly.
There's tons of templates too.
Oh yeah.
In different
QuickBooks makes it pretty easy these days.
Exactly. There's tons of templates to follow.
So it also helps planning. What is real? We're working with a business now that has great income, but man, there's so I'm just trying to figure out how much do you need to live? Like you're going to transition your company to the next generation. How much do you need to live throughout the rest of your life? Answer was, I don't need much, maybe a little less than $100,000 a year. And you kind of go, okay. Well, then you talk to the next generation, and they're like, oh my gosh, he's probably got $250,000 a year. He's really spending $350 a year.
Right.
He just runs half of all of it through his business.
Right.
And we're not going to tolerate this anymore because now we're the ones that get drug into the IRS audit at this point because we're in charge.
Yeah.
So it's
taken away from the bottom line for real.
Right. So yeah, it's really important that you understand how to, or keep those personal finances on the other side. So you really know how much you actually need in retirement. Because I mean, some things cross over. I mean, for me, like my cell phone's cross over. I have a car that I run through the business. It's fully depreciated now, but maintenance and stuff like that. But outside of that, nothing else really crosses over. Cause I try to keep things as separate as I can.
Yeah.
Now if sometimes for travel, sometimes you can say, okay, well, this is definitely business travel. And other times you're like, maybe half of it, half of it was, the other half, not so much.
Right.
Obviously conferences and things like that are pretty easy, but yeah. So if you haven't done any of this, the places where you start is QuickBooks, connect it to your checking account. Or actually, no, where you start is having a separate checking account. Some people don't have that.
Right.
So you want a separate checking account. You want connect QuickBooks to that, start running everything through that account. If you're in real estate, you need to have the home in an LLC. You need to have a separate bank account, QuickBooks or something similar, FreshBooks. I think they have a free version. Connect it to the bank account, and then have the home inside the LLC as well as your rental agreements in the LLC.
Mm-hmm.
So if you're doing an Airbnb, you're now in the hospitality business. When you go to a hotel, you're not writing checks to Mary Jane. You're writing a check to Hampton or paying a credit card to Hampton, whatever. You get my point.
Yeah.
Nobody uses checks anymore. So you have to treat yourself like you're a legitimate business, and then you can run P&Ls and you can say, hey, if I made this small change to my business, then maybe my profitability would go up. Or like one year I looked at my P&L. I was like, holy crap, we're spending 10.5% in advertising as a company. The average in my industry is 1.7. So we are one of the fastest growing firms in Charles Schwab's universe, because we have these benchmarks we submit our data to. But I realized that maybe being 10x advertising is probably not the best place to be.
Right.
And so we started dialing it back. It turns out that a lot of stuff we were doing, we're just spinning our wheels.
Yeah.
But you can't make managerial decisions like that if you don't have the data in front of you.
Right. Right. You can't understand what's actually happening.
Our planning fees, what we charge for planning here. I know what my cost per plan should be, and I know how many people are touching it, and I can back into that by looking at my P&L.
Right.
So I understand how to set my price.
Right.
I also understand for assets under management clients, I understand what the cost per client is, what the revenue per client is. I got to make sure the revenue is bigger than the cost, or else we won't be here.
We want to be growing, right?
So you have to understand too. You have to understand what the numbers and what they mean. Like I was talking to the team yesterday, we grew revenue year over year by 36%. Our expenses grew by 34.
Right. So 2%, right?
But I have enough data now in front of me to understand that, okay, well, it's kind of like a rubber band. It's very elastic. So we have periods where we have high profits, but we have no more capacity for a new client.
Right.
And then we hire all-stars like Shauna who come in, and now we have a great capacity for new clients, but then our expenses went through the roof. You're expensive, Shauna.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity?, simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
So for business owners who are looking to make a change, make improvements, you always should be continuously learning as a business owner. I'll tell you my journey. So it started with Michael Gerber's E-Myth book. I read the book, understand that I need to build processes. So I started building out processes. How do I replicate myself with other great professionals? And how do I bring in people with no experience, like our planning associates, and bring them up to speed faster, but they can do a repeatable process? And you guys get tired of me saying this all the time, but the Chick-fil-A sandwich I buy in Marietta is the same one I buy in Macon, Georgia, which is the same one I buy in Savannah. So why can't someone come work with me, you or Missy, and get the exact same product?
Right.
And so that is, that's something we've been able to do here. I think a lot of our firms in our industry, each person's a little bit different. They don't have the same process or the same experience you would with one advisor versus another.
Right.
And so we fix that here by doing that. Another part of that too is it makes it less about me and more about the team, which is part of growing a firm, bigger than yourself, right? Because I could not do the volume that we're doing now by myself. So that book took me through that journey. Then you go, man, okay, I've got my processes written. I have an organizational chart of what my company should look like in 3, 5, 10 years, right? Mm-hmm. It gives you permission to dream through that process. Then you go, okay, well, how do I get new clients? And so that's where 2 books come into play by Donald Miller, which is Building a Story Brand by Donald Miller. So Building a Story Brand is our marketing plan. So that's what Hadley and Alexa, and we have a consultant that works with us as well, go through every single week. We have a marketing meeting. We have clear objectives that we're setting, and we have measurable results. Okay. So that got us started. Now, then you read the book and you're like, these are really good ideas. How do I execute it? And you're kind of lost, honestly. But don't worry. Donald Miller wrote another book called Marketing Made Simple, which is basically it's not a workbook per se, but it focuses on what building a story brand is about and how to execute that. Those are those annoying drip campaigns that people get. I hope ours aren't as annoying, but yeah. And then we have so many landing pages. I don't know how many. We probably have like 30 plus landing pages now outside of our homepage that people can find us. So it's a whole thing. The website, all this thing it's a 2-time full-time job. But now clients are now coming in, right? And then you start thinking, oh my gosh, like how can we give these people the best service? So my favorite book for that, and Hadley, we can link all these in our show notes, is Setting the Table by Danny Meyer. Mm-hmm. So Setting the Table. So I went through this customer service journey for a year. I read every single book I could get my hands on. And The $1 Million Greeting is a close second. I did like that book, but I think Danny Meyer, Setting the Table. I flew to New York. I went to his restaurant and he does everything that he says he does in the book. In fact, our client scheduling system that texts people to say, hey, you have a meeting with Wiser in 24 hours. And then an hour before the meeting, hey, you have a meeting with Wiser. And then there's the address. They can click on it, get driving directions. All that stuff came from my experience from going to Union Station or Union Square Cafe. I think I should know the name of his restaurant, right? It's at Union Square in Manhattan. So that was from my experience of going there. In fact, I was late for my reservation. Imagine that. I'm always late, right? But I was late for my reservation and they were very accommodating. I called them ahead of time. But anyway, so that book really led me there. And then from that point, I had to go figure out how to continually set goals and build going forward. And so that's another book in the EOS system. It's called Traction. And I forget the author all the time because I don't follow him other than that one book. I think he's probably written 5 or 6 books. I can pull that up for you. Someone out there is like screaming it into their microphone. Is it Gino Wickman? I think that's who did Traction. But that is a great book. In fact, I would have written a business book by now if I knew you could just quote other business books. This is like all my business books that I love. Yeah, Gino Wickman, GinoWickman. So that book, Traction, is a book that I literally carry it with me. It's in my backpack because when I start doing business planning, sometimes it's the most random time and places, and I'll go through and reference a couple of the chapters as I'm writing out. But that's where you want to set, a 3-year, or a 10-year goal, a 3-year goal, a 1-year goal. And then you have the rocks you need to move over the next 3 months to get to the 1-year goal. Then you have the things you got to do daily to hit the 3-month goal. Mm-hmm. And so that's nothing earth shattering there.
Right. Consistency, setting the goals and executing them.
But what happens is, as business owners, you get lost in doing financial plans, taking client phone calls. You do all these things that distracts you from running a business.
Right.
It's two separate things. Being Casey, the financial advisor, versus Casey, the business owner, are two separate people. Mm-hmm. And that second person, the business owner, gets forgotten a lot of times. It's just natural to do that because we get stuck as technicians.
Right.
We're working.
Because you created a job.
Because I created a job for myself, as the first book, E-Myth talks about. So these are, again, this is nothing that is earth shattering, but it's my own master's program. You get more out of these books you're getting any undergrad than you're getting in any master's program. And to me, it's real world examples. These are consultants talking about people they've met with, their own journeys, and it all kind of pieces together. And this is how you run and grow a business. And then obviously, I think I'm a natural leader by default, but some people have to learn how to lead.
Right.
So you probably add leadership training to that if you're not a natural leader. My management style is not authoritarian for sure. So, But some people lead that way, and those are the ones that are going to have to change. That doesn't really work in today's society as well, especially with the 23-year-olds.
You have to be a leader that people want to follow.
Right. That's the idea.
Because you bring out the best in them.
Right. And they have a lot of patience sometimes as people are growing through their own journey.
Right.
Through that. But anyway, I think that's hopefully a little added bonus to the conversation today in what it is to be and grow a business. And some people listening are just trying to manage their real estate, and they're going to have a big team. Some people may be running a IT or a marketing company, and they will have a big team. But it's just important that that you have the right tools in place. And if you don't understand your P&L and your balance sheet, then you're never going to be able to make the right decision. And sometimes the right decision is fold up and join someone else.
Yep.
I see that more times than not. I don't say it, but sometimes I'll look at it and go, you're really great employees. Yeah. Like you should consider working for someone who's a great leader.
Yeah.
Right. And you guys could just absolutely kill it, but that's not what people want in the end. They want that independence and work for themselves. But I'd say most small business owners have simply created jobs for themselves and aren't really business owners.
Yeah.
Just from my experience. Thank you for watching this episode. We have some news coming down. This is episode number 247. Episode 250, we get a slightly revised studio. We're adding a second camera. We're excited about that. We have new graphics. So probably episode 250 might be a good one to watch on our YouTube channel, A Wiser Retirement. We've also linked to a few other episodes on the YouTube channel, Asset Protection Strategies for Business Owners, the new FinCEN rule for small business owners. If you have an LLC, you need to identify yourself to the government this year. Small Business Association really fought that. They lost. Government won. Basically, the government wants to make sure that they understand who owns assets in LLCs, so you can't really hide behind an LLC anymore after this year is up. So make sure you're doing that because there are penalties. We have other podcasts, episode 207. What are the biggest struggles of a small business owner? Episode is probably 176, Tips to Grow and Scale Your Small Business with Marty Paradise. We need to get Marty back on here. We haven't heard from Marty in a while. Marty's a great business consultant out of Charleston, South Carolina. If you are a entrepreneur, want to grow your business, scale your business, he is one of the few guys that knows about microgerber. He's certified in his system. He's certified in Gino Wickman's system of EOS and Donald Miller's Business Made Simple system. So he understands a lot about helping a business grow. In fact, we have three clients with him that are doing great. Trying to figure out where to put all that extra money, actually. So they've done a great job with those. So if you would like to reach out to one of us, you can do so by going to wiserinvestor.com or you can click on the show notes. Thanks for watching. We'll see you guys soon.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced by Rachel Dotson. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.